Hello, Theo traders. This is Gianni DePoce, and today is the 2nd of January, 2024, the first trading day of the year. And markets have started off the new calendar year on the defensive, and it looks like Santa Claus left town early. So we have one day left in the well-known Santa Claus rally period. And as of right now, we are trading in negative territory with the exception of the Dow Jones, which did hit a new all-time high today. But I want to start off by looking at the S&P. We were talking about in the member chat room late last week how the market was looking a little bit extended and due for a corrective decline or perhaps even a consolidation at the least. And we are getting this pause in the rally now. And I think it's leading to a lot of the overly anxious bears getting ahead of themselves, calling for the big move lower to happen. But I still think there is ample time left in this rally, both from a technical and cyclical standpoint. And I would look for a higher low to be completed within the coming sessions and eventually a resumption of the uptrend. Now, it is worth pointing out that last week saw consumer staples act as the top performing sector on the week, which tends to be a risk off warning signal, and we are seeing some defensive posturing unfold today. But seeing some strength unfold in the healthcare sector, I want to jump right over to that now before we look at some of the other indices. XLV, the healthcare ETF, breaking out to a new multi-month high. It just hit its highest level since December of 2022 on the first trading day of 2024. So this is something we've been talking about to members, and even in these videos, the potential theme of healthcare coming back into the foray. Remember that it is the second biggest sector in the S&P 500, and if we are going to see a pause in the technology sector's domination with respect to outperformance in this bull market, I think it would be really healthy for the broader indices to see healthcare start picking up the slack. And it's being driven largely by Amgen, which just broke out to a new all-time high today. This is also looking bullish. Looks like it can go much higher. I have an upside target in Amgen in the 350 to 360 dollar area at the least. And this is good because this stock is also part of the Dow Jones and probably explains some of the strength that we've seen in the Dow today, again, hitting a new all-time high despite the S&P and the NASDAQ pulling back on the day. So, it's not all doom and gloomy out there, but it is worth pointing out that you usually see the Dow Jones outperform the other indices in a more risk-off environment. So we are no longer in that easy money phase of this market rally. If anything, we're probably going to be shaking out the weak hands in the coming sessions and then resetting sentiment because it has moved toward more a greedy market environment. When you look at some of the moves that we've seen, especially in the crypto space, there has been a lot of money made in December. And December was a good month for momentum traders, myself included. But now it's a matter of protecting those gains and preserving capital for what I think will be the next leg higher in the market. If we take a look at the NASDAQ, it is leading the market lower today, down almost 2% as of this recording, but we have almost already retraced 38.2% of the swing move up, measured from the low of December 4th in the NASDAQ 100 futures to its all-time high on the 28th of December. So we could be coming into a logical area for buyers to step back into the picture. Again, tech has led the way higher, so it's not really that surprising to see it lead the market lower, but again, does suggest some caution in the near term. So let's jump over to the crypto sector. We've been and continue to be bulls in the crypto space, especially on Bitcoin and Ethereum. We've had an upside target in Bitcoin in the $48,000 to $50,000 area. The January contract for Bitcoin futures reached as high as $47.95. Not long after it opened in the Monday evening session. So, that may be good enough. I would like to see some higher prices and perhaps a little bit more euphoria in the space. But we also have to be aware that we are getting into the danger zone of some various technical and cyclical factors. And I stand by my previous position that the easy money has been made in the crypto space. And at this point, we have been scaling out of some of our positions related to the cryptocurrency sector, namely our positions in Coinbase and MicroStrategy after they both exceeded our initial upside objectives. Let's go ahead and jump over to Ethereum, which I would like to see continue or start more so outperforming Bitcoin. I think it is in a better position with respect to some cyclical factors. But again, the fact that we hit new multi-month highs here in crypto, I think is an encouraging sign with respect to the prospects of another rally in the stock market. The reason being is because crypto has been such a really good indicator for risk appetite amongst the more speculative segments of this market in the last few months and really the last few years. So seeing crypto make a new high here on Tuesday, I don't think is a bearish sign unless this is the high, and that's something we need to be ready to adapt to in the coming days and weeks if that is the case, but that is not our position at the moment. If we go ahead and take a look at precious metals, they are on the retreat, and I think we could be in a defensive environment with respect to gold and silver in the next few weeks, perhaps even the next couple of months. If we look at bonds are on the retreat. We're seeing duration lead the way lower in terms of price, but that also means that the yield curve is steepening today. So not really the end of the world. You can see that ZB is down more than Xeon. In other words, that the yield on the 30-year bond is rising faster today than the yield on the 10-year Treasury note. If you go ahead and take a look at the US dollar is seeing a nice rebound today. And we know that the dollar coming down from its highs over the last couple of months has been a general tailwind for the equity market. But I would like to see a situation where stocks start to rally in conjunction with the dollar. And I think that will be a telltale sign that we've entered the late stages of the equity market cycle. It is not uncommon to see a global flight to safety in terms of capital into dollar-denominated assets before a more protracted decline in markets like stocks. So seeing the dollar catch a nice bid against the Japanese yen, catching an even better bid against the euro, which is down pretty hard, down over or almost 2 cents from its high that was registered last Thursday. So this could be a significant lower high with respect to the trend. And I'm not really a fan of the euro's positioning right now. We can even look at the euro against the Japanese yen because I think the yen is actually in a very unique position to appreciate in the coming weeks and months. And keep in mind that when it comes to the dollar basket, the euro represents, I think, around 57, 58% of the basket when you look at DXY, whereas the yen only represents around 13%, give or take. So could we actually be entering a situation where the dollar index is rallying due to euro weakness, but the dollar is actually losing value against the Japanese yen? And I think the way that various cyclical factors are playing out in the Japanese yen, that's something we need to be ready for and something that remains at the top of my radar right now. So that's pretty much everything that I wanted to cover with viewers today. So thank you so much for tuning in, and wishing you all a prosperous 2024. And if you want to know more, the place to find us all is at theotrade.com in the member chat room. So see you next time, everyone. Thank you for watching.